There's something transpiring to see this dramatic move and strong physical buy-in with the paper market having no ability to slow it down or reverse it. To the 99% of people that don't own gold, ask your financial advisor, how come we don't own the number one investment for the last 25 years? That's the question that I think goes unanswered.
You're watching Silver News Daily. Subscribe for more.
Silver's about to go where no one thought possible, and the fuse has already been lit. Right now, behind closed doors, something extraordinary is happening in the silver markets. While 99% of investors sit on the sidelines, unaware or uninterested, a tidal wave of physical silver buying is tearing through Asia, cracking open the foundation of the entire paper market. The COMEX system, once the price dictator of the global silver trade, is buckling under the pressure. And here's the thing, this isn't a drill. Major institutions can't hide it anymore. Delivery delays, inventory drawdowns, and widening spreads are all screaming the same message. The system is breaking. And once that break becomes visible to the public, once the illusion of control vanishes, silver isn't just going to $50, it's going parabolic. Experts are now warning that $500 silver isn't some wild prediction. It's the logical endgame of a market cornered by unstoppable demand and a broken pricing mechanism. So the real question is, what happens next? Because if Asia's buying frenzy really is the final trigger, then we're all about to witness the biggest wealth transfer in modern history. Stay with me, because by the end of this, you'll understand why the COMEX collapse isn't coming someday. It's happening now.
Well, you know, that conventional financial plan, I don't believe in, and we believe traditional financial planning doesn't work. And look at all, we had the two greatest bull markets ever in stocks and bonds, and most people still can't retire. So that traditional stuff, but 20%, now, I'd be glad with 2% going in. We can't imagine what the price would be if suddenly people looked at it that way. Let's not forget that right now, it's still kryptonite to most financial advisors. And what they have people in is still getting people's attentions. The technology, the cryptocurrencies and all. Can you imagine if those things just stop going up? Forget about going down. Just stop going up. So the people who want to believe in much higher gold prices, that's going to come from money moving out of financial assets for real. And can that happen? Yes. I will say this much. I think once we get the prints of 4,000 gold and $50 silver, and I don't mean 2 seconds after, maybe days or a few weeks, that's probably going to be a period where we're going to get a pause or some corrective action, because the markets are very, very overbought, particularly in gold itself. But for somebody that's looking into 2026 and all, and I'm going to go back and I'm singing to the choir, it's your business, it's not mine. We don't have any, I don't get anything from sales or anything. But I will tell you this, you need to have gold and silver as an insurance policy. It's been that way for years. You had a chance to buy it cheap. It's not cheap anymore. But given everything that's happening in the world, and as I still see these portfolios that come into our office that are 100% financial assets, it's a must. And the very fact that a Morgan Stanley, who literally lives off the sale of financial assets, is willing to suggest openly 20% interest in gold, that tells you changes are afoot in the financial service industry. And you'll know when it's time for you to get out of the business when you start seeing them having ads to buy gold. Then, and only then.
The paper silver market isn't just under stress, it's hemorrhaging. For years, the COMEX acted as the price dictator, using leveraged contracts and naked shorts to suppress silver's true value. But in 2025, that game is falling apart in real time. The disconnect between paper contracts and physical delivery has never been wider. COMEX inventories are being drained faster than they can be replenished, with registered silver dropping month after month, while demand from Asia and sovereign entities refuses to slow down. The so-called price discovery mechanism of futures trading has been exposed as fiction. Because when buyers demand actual metal, not just paper promises, the system starts cracking. Premiums in physical markets are surging, delivery delays are piling up, and most importantly, trust in the COMEX's ability to fulfill contracts is vanishing. The futures market can print paper silver at will, but it can't print physical ounces. And now, large buyers know it. Eastern exchanges are seizing this opportunity, capturing more of the volume and establishing their own pricing mechanisms backed by real metal, not leverage. The result? A slow-motion collapse of the West's grip on silver prices. What we're witnessing is more than just market stress. It's the unraveling of an entire financial illusion. And if the paper market continues to lose control, silver won't just break out. It'll blow past resistance levels with nothing to hold it back.
It's just a matter that if gold wasn't for what a lot of people, listen, a lot of people own gold because they're concerned they want to have an alternative to paper currencies. They're concerned about economic and social issues and all. If you have those concerns have only grown worse. So there's no reason to remove your insurance policy now, that, especially if you bought it lower. But there's people that bought gold, I've had them, that bought it simply because, hey, I thought it could be better than stocks and bonds. If that's the case, then you should use some sort of scale-up program. As it goes higher, you should liquidate. Listen, I'll say this again. To get much above $5,000 in the next 12 to 24 months, even though we're already approaching 4, things, if we think are bad now, are going to have to be a lot worse. Now, part of this also is we've seen just tremendous physical purchasing out of the Far East, particularly in China. The difference between us Americans and our Chinese counterparts, they spend weekends in the mall taking hard-earned dollars that they made and buying physical gold for ownership. Here in the U.S., where 2/3 of the people are working paycheck to paycheck, they're borrowing money to go buy things a lot of them don't need that they can't afford to pay for on weekends at the mall. Now, I think the Chinese are going to come out a lot better off than those folks. And so there's changes afoot. I also think, and I go back to an old standby, I think, since you and I started talking, and all this talk early in the year, the death of the BRICS, and Trump is going to break their kneecaps and they're never going to stand. Here's a little secret, ask people. How many trade deals have actually been done? How many are done, signed, and enacted the way Trump said? You don't even need one hand to count them. That's another reason why gold is being bought, because people outside the United States recognize that the de-dollarization is real. The less concerns about wanting to be involved in the U.S. and its money is occurring. And there's groups outside, especially in the Far East, that are willing to look at trading among themselves without the U.S. participation and in an alternative to paper currencies, particularly
What's fueling this breakdown? Look east. Because Asia is on a historic buying spree unlike anything the silver market has ever seen. In China, gold and silver have become more than investments. They're cultural safe havens, symbols of security and wealth in uncertain times. And right now, Chinese consumers are converting their yuan into physical metal at a pace that's blindsiding Western analysts. We're not just talking about institutions or central banks. Everyday people are flooding jewelry shops and bullion counters, emptying inventories and creating weekend lines that stretch around city blocks. Silver eagles, kilo bars, coins. If it's real, it's getting scooped up. But it doesn't stop with China. Across the broader Far East, from India to Southeast Asia, the story is the same. Central banks are hoarding gold, retail investors are accumulating silver, and all of it is being done outside of the Wall Street system. Eastern markets are no longer passive participants. They're price setters. The Shanghai Gold Exchange is booming. Premiums in Asian markets are consistently higher than in the West, and the appetite for physical delivery is relentless. This isn't speculative trading. It's a systematic accumulation of hard assets by populations that no longer trust fiat currencies or paper claims. And as this demand continues to surge, it's squeezing the already fragile global supply chain, forcing Western inventories to dry up and exposing just how little real silver is available at current prices. If this continues, and there's no sign it's slowing down, then the price pressure will become unstoppable. The East is buying, the West is bleeding, and COMEX is on the brink.
Yeah, and we've done that without certainly here in the U.S., I can only speak to Elijah, and that we've not done that with typical investor participation. Still, I have a separate planning group, and still to this day, we see 5 to 15 new prospects a week, and not 2% of them have 1% gold in it. So it's not like this has become, well, the reason it's going up is because so many people are getting involved in it, like you see in technology or stocks. You could then beg the question is, what if they do start getting involved in it? What's the number? And that's what you're going to have to believe in for much higher prices over time. But for now, it's still a great accomplishment and a good thing. And there's two separate holders of gold right now. And I've been both, and I have both. Listen, if you own gold because you're concerned of a whole bunch of social, economical, and political, don't even think about selling it. Be glad that you bought it a lot lower because you got insurance for a lot cheaper price. If you don't own any and you're concerned about the social, political, and economic, what's stopping you from owning it? But if you bought it between $1,300 and $2,000 because, hey, I just thought I could make money in it, when you got doublings, you got to start thinking about taking something off the table. So no two people are alike. I'm not a big believer, although I finally did put out these so-called model portfolios. I never liked them because no two people are alike. Many times spouses aren't even alike. But I do think overall, those of us like yourself and your company who've been adamant about ownership of gold, listen, I put out some numbers today. Just since 2021, the end of 2021, when I said get in gold is up 4 times what the Dow has done. And it's up 4 times since the millennium began. Now, what I beg the question is to the 99% of people that don't own gold, ask your financial advisor, how come we don't own the number one investment for the last 25 years? That's the question that I think goes unanswered, that should be answered.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
All eyes are now on a single number, $50. That's the level that has haunted silver since its last explosive run in 2011, and it's where we are right now, hovering, grinding, building pressure. But this time, it's different. In 2011, silver's surge was driven largely by speculation. In 2025, it's being driven by scarcity, by physical demand that can't be met, and by a systemic failure in the very structure that sets the price. $50 isn't just a resistance level, it's a trigger, a psychological line in the sand. And if silver breaks above it with conviction, it won't be a gradual move. It'll be a detonation. Technical analysts are already sounding the alarm. Break $50, and algorithmic traders will pile in, momentum funds will chase, and institutional money that's been sitting on the sidelines will be forced to take notice. Even more critical, it will send a signal to retail investors, most of whom have completely ignored silver until now, that something massive is unfolding. Once the $50 barrier is shattered, the illusion of silver's stable price will be broken. The mainstream media will jump in, headlines will go viral, and the FOMO will begin. We've seen this pattern before in other assets. Bitcoin at $20,000, gold at $2,000. But silver's volatility means its breakout will be faster, sharper, and far more chaotic. If you thought $50 was the destination, you're not paying attention. It's just the starting gun, and what comes after could redefine everything we thought we knew about this market.
I just actually put out a report about it. It's an amazing number, even for somebody that was banging the drums as hard as he could between 1,300 and 2,000, thinking that if we got to 4,000, it was 3 to 5 years at least before we'd get there. And here we are. There's something transpiring to see this dramatic move and strong physical buy-in with the paper market having no ability to slow it down or reverse it, you can start taking some guesses at what it could be. There's a whole bunch of things from a canary in a coal mine of what's happening in different bond markets around the world outside the U.S. What's happening with government shutdowns and the stock market behaving as it continues, as if nothing can ever harm it, including really a 21st century pyramid game now where these semiconductor companies are investing in each other and somehow passing the money around makes them all good. So there's a whole bunch of things, but I sit here as someone that I don't know if you could have been more adamant bullish on gold these last few years. I mean, in the end of 2021, I sold all my stocks and bonds just to own physical gold. And yet I still sit in amazement that as you and I speak, we're just, a hair away from 4,000 and one more little push at $50 silver. It's funny. I left the metals and mining industry in 2013. Never thought I'd be back involved in it. Have been involved in this financial planning group here in New Jersey. We manage over $1 billion. And I kind of got my toe wet in 2019. And by 2022, I was full-fledged back in. I don't work as a IR or any of that kind of stuff. I had a blog that had some sponsors. But I found myself getting away not only from the general financial planning group, but also the faith and finance, which I believe the only reason I'm still alive, Elijah, and probably why we've come together, because we both share a strong belief in our Catholic Christian faith. And so with the tremendous gains that we've had, I've had the best 5-year period ever in my career. Clients who chose to listen would have done just as well. I just felt that it was time in the latter stage of my natural life, approaching 70 years old come April, that I need to refocus back on the faith and finance. And therefore, by year's end, I will not be involved in the junior resource market, no more blog sponsors, things of that nature, and trying to speak more about matters of finance from a biblical perspective than what some junior resource or stock may or may not be doing. And that'll be the big change compared to.
Despite everything unfolding in real time, skyrocketing demand, crumbling supply chains, and a looming paper market collapse, retail investors in the West are still asleep. Think about that. Silver, the best performing hard asset of the last quarter century, is quietly positioning for a parabolic breakout. Yet 99% of investors don't own a single ounce. Not in coins, not in bars, not even in ETFs. It's a complete blind spot in the average portfolio. Financial advisors are still clinging to outdated 60-40 stock bond allocations, with precious metals barely registering, if at all. In fact, industry surveys show that less than 2% of U.S. investors have any exposure to gold, and silver is even more neglected. That's not just surprising, it's historic. Because when an asset this explosive is this ignored, the setup for a violent upside move becomes undeniable. But here's the thing. That disinterest is already starting to shift. Bullion dealers are reporting a sudden and sharp uptick in demand, particularly for silver eagles and physical delivery. Wealthier investors, the ones who can see the cracks forming, are quietly accumulating before the herd catches on. And history tells us what happens next. In every major bull market, from the 1970s to 2011, retail was always the last to arrive, and when they did, they didn't trickle in. They stampeded. Once the average investor realizes silver isn't just an industrial metal, but a financial life raft in a sinking system, demand will explode. And unlike stocks or crypto, there's no infinite supply of silver. When the floodgates open, there won't be enough metal to go around, and prices will react accordingly.
Leverage-wise, first of all, I think you should always have physical metals first, even though I'm singing to the choir. But that would be whether I was talking to you or anybody else. Physical metals, you have to have some insurance. After that now, from this point on, let's take gold's at 4,000. And let's say it goes to 5,000. That's going to be a 25% gain that you had on the gold. I can assure you almost every major producer will see its stock go up 3 or 4 times that return, because 98 or 99% of that gain will go to their bottom line. Their cost doesn't increase dramatically just because gold went from 4,000 to 5,000. So the real leverage is in the producers of the companies. And you're going to see, we're already seeing it, but you're going to see just bigger and bigger and more M&A in that industry. Then, of course, the drip down effect hits when the junior resource companies, who are still not participating in any major way, but as some of them start to merge or be taken over by these majors, they'll have their day in the sun as well. So yes, mining shares over high-risk junior resource stocks, but both of them can outperform the physical metal because the leverage that'll be offered to them will be greater. But with that leverage opportunity comes higher risk. So you have to measure both your mental and financial tolerance before you participate in that side of the market. And remember, it's hitting highs, but not dramatically new highs. It was up 7% 3 or 4 months ago. Now it's up 9 or 10. That's not a market that's now. A few of those stocks have gone insanely high in that regard. But I would just tell you this, as great as the U.S. stock market appears to be doing, markets outside the U.S., where I focused on at the beginning of the year, are greatly outpacing the U.S. And that's one of the other things that I believe it or not has been buoyant to the gold market. China, which many people predicted to death 12 or 18 months ago, they were going to collapse. I was in the opposite camp. In fact, I was called anti-American by a couple of people because I was so supportive of their markets. And the fact that they have turned around and have withheld the pressure from this, this big stick that Trump brought into these trade wars, China is getting its act together again, and by its stock market remaining strong, it's allowed the people to get into the physical gold market in a more powerful.
If you want to understand where silver is heading, just look at gold. Over the past 2 years, gold has rocketed from $2,000 to nearly $4,000 per ounce, shocking even the most optimistic analysts. And while gold has been stealing the headlines, silver has been quietly loading the spring. Because here's the truth: silver always lags gold. Until it doesn't. Then it explodes. The gold-silver ratio, a powerful tool that measures the relative value between the two metals, is flashing an unmistakable signal. At around 80 to 1 right now, that ratio is still heavily skewed in favor of silver. Historically, when this ratio compresses, silver outperforms gold by multiples. Just look back to 1980 or 2011. In both cases, the ratio collapsed and silver didn't just catch up, it went vertical. This isn't speculation, it's pattern recognition. And in 2025, the setup is more extreme than ever. Gold's explosive move is already validating the global shift toward hard assets. Central banks, institutions, even nation-states are now treating gold as the ultimate hedge against fiat collapse. But silver? Silver is still trading at a fraction of its historical high, despite having both monetary and industrial demand behind it. That's the opportunity. Because once silver starts to move, it doesn't move slowly. It plays catch-up with a vengeance. The longer this gap holds, the more violent the reversion becomes. And when that moment comes, when the ratio starts collapsing and silver begins to mirror gold's parabolic rise, there will be no time left to react. You'll either already be in, or you'll be chasing a rocket.
Yeah, it's not so much that it's even margin calls at this point. It's just that when a market crashes, people sell everything first and ask questions later. Even if they don't have a margin call, they go, oh, well, gold's going to go down because there's a stock market crash. I better get out. And it becomes a self-fulfilling prophecy. So outside of a crash, that's the only asterisk that I would put. And then no one knows if and when those things are going to happen. I will tell you this much. For the first time in years, I've actually implemented bearish bets on the U.S. stock market. In the last week, I've taken in, and as you and I taped this morning, I actually looked at the NASDAQ and decided to take bearish positions. So while I think a stock market can go down, as much as I have those positions, overall, the rest will be hurt if there's a crash. So I think the best of all worlds is a peaking and a rollover than a sharp decline in the general equity market. And you don't want to crash. So everybody thinks, oh, wow, crash. And no, if we lose 20 or 30% overnight in a matter of days, we won't get that transfer of wealth transfer out of those markets does. You want it to roll over, kind of peak, go sideways, decline a little, but we don't want a crash. A crash will benefit nobody. It may make you feel good for a moment, but it'll kill the rollover effect that otherwise would occur. So outside of a crash, gold and silver should work higher. Move in the physical market is strictly basically coming out of Asia. It really is. It's dramatic. Central banks continue, the Chinese, that et cetera and all. That sooner or later, and it will probably come after we hit that number, and the general financial media spends more than 30 seconds talking about gold at $4,000 and silver at $50. We'll have a corrective consolidation phase, and then probably in 2026, 6 months from now, you'll be speaking about, wow, Pete, we're really seeing people show up now, particularly since the stock market's peaked and everybody's not running to crypto and AI. And that'll be the combination. That's what, if you want to look for much higher gold and silver prices, that's the formation and the kind of change you're going to need to get much higher prices. But don't lose sight of how well this metal has performed without these people participating. Well, the ultimate crime in investing is never being wrong. I've been wrong enough times. It's staying wrong. So you have to have hope is the best spiritual strategy you can have. But most people use it as their investment strategy, and it just doesn't work. It's how you get. People now are trading emotion. I'll give you a real quick example. Someone who bought tremendous amount of physical gold at much lower prices was listening. It was great. It was great. And now when you speak to him and say, listen, you made a lot. Oh, no, this is only beginning. This is going to, well, what's your process on how you're going to plan on dealing with this? I'm just going to watch it. Emotions are not the way you be successful. You have to have a plan. You know, I worked for 13 years in the NFL with the New York Giants. It may not look like it now the way they're playing, but I worked for them through 2015 when they won 2 Super Bowls in that period. And the reason I bring that up is every coach has a game plan. They all do. They spend 3 days preparing it. And then if the game plan isn't working in the first half, they go into halftime and change that plan. Most people right now, even some people that are in metals and mining, don't have a written or idea plan, Elijah. They're going by emotion day to day. And that's a poor decision-making process. Most people, when they look back at things that went wrong in their life, they'll say, hey, when I got too emotional, I was caught up in stuff and I didn't make the right decision. You need to get a written, formidable plan going forward here. And irregardless of what happens, you stick to that plan and you make the changes accordingly.
While investors debate interest rates and inflation targets, central banks are making moves that speak louder than any press conference. They're dumping dollars and hoarding gold. And though it's not grabbing headlines yet, the implications for silver are enormous. Over the past few years, we've seen a coordinated shift by the world's central banks, especially in the East. China, Russia, India, Turkey, even Poland. They're not just adding gold to their reserves. They're doing it consistently, month after month at record levels. This isn't diversification. It's a declaration. The age of dollar dominance is coming to an end, and sovereign nations are preparing for a new monetary regime. One that's backed by real, tangible assets, not promises. But here's where silver comes in. Because while the spotlight is on gold, silver rides shotgun in every monetary reset. It's the metal of the people, scarcer, more volatile, and historically used as money in nearly every major civilization. As central banks gobble up gold and drain global inventories, they're creating a gravitational pull that drags silver higher. The result? A systemic shortage not just of gold, but of trust in fiat currencies altogether. And as that trust erodes, silver becomes more than just a hedge. It becomes a necessity. Investors looking for protection, liquidity, and explosive upside will inevitably turn to silver. The central banks have already made their move. They've shown their hand. And when the public finally realizes what this means for the global financial system, the flight to silver won't be strategic. It'll be a stampede.
These last several decades, looking into a crystal ball, the only thing we became experts in is how to eat more broken glass. So we put our pant legs on one leg at a time like everybody else. But one of the things that's real important to me is that in the faith, if you take a biblical perspective, Protestant or Catholicism or even in Judaism, there's no support of the biggest thing that Americans have got hooked on, and that's debt. That's the reason we're in such a huge problem with 37 trillion in national debt, consumer debt, corporate debt, and yet no teaching of faith that I know of, certainly from biblical proportions, has supporting of that. In fact, it's full of warnings about what that can lead to. Now, I've been on that kick for almost 25 years. Wherever I talk to people, they say, what's the best investment? And I say, pay down your debt, get out of debt and all. And that's going against the principle because consumer debt continues to expand and all. But part of that is also the fact that whatever or who's ever in charge for the coming years, those of us that still have something left, the wealth, are going to be kind of trying to be taken from because more and more people are going to need it because the government just takes from one group to kind of give to another. And one of the things that I also believe that it teaches us that, yes, we have to be prepared to be willing to help others, but we need to do that by being as efficient and effective on what we have. And typical financial planning doesn't do that. Typical financial planning, which used to be a pad and a pen when I started, and now it's computer programs with 400 pages and all sorts of graphs and all. But basically, it's chasing net worth. It's on the principle that Wall Street has that more money will equal more happiness and solve your financial needs. But in order to do that, you have to take risk trying to hopefully a past investment product performs as well, if not better, to reach that goal. And what we find in my work is that most people are not cash flow literate. They're illiterate. They're not effective for what they have. So first, being efficient and as effective as you can be on what you have is a guiding Christian principle. And I'm not in the group, by the way, because there is a sect within, primarily in the Protestant community, but there are some Catholics that fall into it as well. And that's the Christian prosperity, that we're all supposed to get as rich as possible and that God wants us all to be rich as possible. God does bless, and there's people in the Bible that he loves very much that were wealthy, but he puts a much extra burden on those of us who are gifted with extra wealth. And part of my work is trying to get people to recognize that you're called more as someone with some wealth to help than some person that's just, getting by. And that's the difficult thing. That's why Jesus uses all sorts of parables, from the rich man to the lady with just the coins and all, to try to teach us that we're not to get attached to money, and hopefully that for what remains of my natural life, I can get more back into that, because I lost myself in this metals and mining boom. And don't get me wrong, it's been highly profitable. And there's really no one that would be mad, but I really think it's time that I need to do more of the faith and finance and less about metals and mining and stocks and things of that nature.
It starts with whispers, delivery delays, shrinking inventories, a quiet surge in premiums. But then the tipping point hits. Maybe it's a breach of the $50 resistance. Maybe it's a failed COMEX delivery. Or maybe it's just one too many headlines about central banks loading up while everyone else is left behind. Whatever the trigger is, the effect will be the same: a full-blown public panic. Silver will go vertical, not gradually, but violently. And unlike past bull runs, this time the system behind the price, the COMEX itself, won't be able to contain the move. The paper market is already cracking, and once confidence collapses, no amount of derivatives or synthetic contracts will stop the flood. Asian demand will keep surging, retail investors will scramble to get in, and institutions will be forced to chase the momentum. This isn't just a silver rally, it's a systemic reset. $100 silver won't be a milestone. It'll be a pit stop. Because the pressure building behind the scenes, the short positions, the physical scarcity, the geopolitical shifts, is setting up a move that makes $500 silver not just possible, but probable. And when that wave hits, there will be no going back. The financial world is on the brink of a revaluation of real assets, and silver is at the epicenter. So if you're still waiting for a sign, this is it. The silver tsunami is already forming. Prepare accordingly. And remember, this isn't financial advice. Speak to a professional before making any investment decisions.